Good morning. The old man here. April 5th, 2025. Well, as y'all know by now, silver took another pretty good hit yesterday. And gold came down some too. That's roughly 77 bucks, something like that. Excuse me. The thing about that is, like I was talking yesterday, even though, depending on how you look at it, my stack is the same today as it was yesterday and the day before. The fact that the paper market dropped significantly, in fact, it has the paper market on silver has backed all the way up to January 1st. We've basically we gained in the last 3 months. The paper market had gained 18%. Rotor, stop it. And we, they moved all the way back to January 1st pricing. So, if you were investing in paper market, you took a pretty good butt whooping if you've bought in January, 1st of January, and held it till now. Yeah, you took a pretty good whooping as far as that goes. I look at gold and silver as insurance against the fake fiat system that is bound to fail, and everything's adding up to that. So it kind of bothered me that over the last 3 months, silver especially, and gold, was going up significantly. And basically my insurance premiums against the fake fiat currency was going up, and I just soon see it as reasonable as possible. So now that we're back to January 1st figures, I'm loving it. It gives me the opportunity to, buy more insurance at a better price. So, gotta love that. The one thing that kind of interesting, silver was, running pretty reasonable, very low or pretty low premiums on silver. And so on Thursday, after it took an 8% dip, I didn't think too much of it. I thought, I hate to rush into anything, whether it's going up fast or coming down fast. I like to let it see where it's going, take a minute, think about it, research it, and see where it's at and where it might be going. And so I thought, Friday morning, looked at my phone or looked at Kitco and seen it dropped another 50 or 70 cents, something like that. I don't recall now what exactly it was in the morning when I woke up, but it was another pretty significant dip already. And if I said percent, I meant to say 50 cents to 70 cents, not percent, but whatever. Took a pretty significant dip, so I'm thinking, boy, I better look into it. Pick up some silver at these better prices. And one of my local shops is a bigger shop, and they're big enough that they hedge. So what I mean by hedging is they buy shorts in the silver contract. So if it goes down significantly through the course of a day or a week or whatever, what they gain in their shorts on the futures market, they lose on the physical market in their store. So they're at par. They really haven't lost or gained anything, as far as the business is concerned. So I thought, well, maybe they won't be right on top of getting their getting their premiums up. And I was pretty much right. I was looking at their website, and they were showing some pretty good sales still, 99 cents. So a few things, 99 cents over spot. Not very much, mind you, but a few things. Called him at 9 o'clock and it was all gone. Anything that was had a low premium was already gone. People had bought it online, or at least that's what I was being told. And if it was me in that position, I would have pulled it too. Even though you're hedged, there's no sense in selling it that cheap when it drops that fast. So, then I looked at some of their other stuff that had higher premiums, and at that point, if you're paying $3-4 over spot, what's the point? Even though it dropped by $4, if you're paying $4 over spot, you're at par. You're at par with where it was the day before it dropped. So I wasn't, I'm thinking, crap, not going to be able to really take advantage of this drop. And later in the day, as silver dropped, some more, and I really thought, man, I'm never going to get a good deal through this through this period. And I thought, well, what the hell? And my other silver dealer, real little guy, he doesn't have enough to hedge, so he couldn't even afford to hedge if he wanted to. And so, I wasn't going to call him and beat him up. I don't want to ruin that relationship that we have. So, I thought, let it be. And but I thought I'd look online and see if I could find some better deals. And there's a few out there, but I hate to buy online unless I really, really have to. So I was just going to kind of wait and see how things shook out. And about that time, my other dealer that I've been buying scrap gold and sterling silver and even some constitutional silver at spot, he texted me and said he had 68.5 grams of 14 karat gold, of which, when you do the math on that, is about an ounce and a quarter of gold is what you have there. And he offered that to me at spot of 30.26. So that's a significant savings off of what it was the day before. And I really didn't think anybody was going to sell with a significant drop. That's normally not the case. He doesn't get the opportunity to buy when there's a significant drop. Mostly when there's a significant climb, do people start selling their scrap or their sterling or even their constitutional silver. So I didn't expect a call from him or a text from him at all, and by God, I picked up an ounce and a quarter at the new spot. And actually, spot is actually a little bit above right now, sitting a little bit above what I intraday bought it for. So I bought it for 30.26 an ounce, and that's 3,026 an ounce. And I picked up an ounce and a quarter of gold at the end of the day, even though it's 68.5 grams, or 68.5 grams of 14 karat. That, like I say, you do the math on that, and you're at an ounce and a quarter, roughly, of gold. And so I picked that up, and then a couple hours later, and silver was still dropping. He texted me and said that he had Ruger. He had $50 face of dimes, mercury dimes, in fact, and pretty nice looking mercury dimes. Pretty nice looking mercury dimes, and I bought that at spot. And at that time, it's the spot was about as low as it got for the day, so that was also a pretty good deal. Basically, why I'm bringing this up is the exact reason why I have developed a relationship with this guy of picking up 14 karat scrap and sterling and even constitutional, of which I really didn't think I was going to get at spot. Jesus, Jenny, that was a good deal. But he knows where he can move that when he gets a chance. And honestly, just like everybody else, he doesn't know. He wants to move it as fast as he can, make his percent or his percentage, whatever it is. and he's not going to take the chance to wait until Monday and find out it drops another. And it could, I don't think it's going to, but it could drop some more on Monday through the Sunday night Asian market and into Monday morning. By the time he called me, it might drop some more. So he wanted to move that as quick as he could and make a spread. I'll be going to pick that up this morning. Right after I get done with this video, I'm heading up there. It's about a 40-minute run to Sanford from here. But with all that being said, I did some research and found that normally you won't see, especially in a bull market, you won't see gold or silver run lower than its 200-day moving average. If it does, it'll only dip below that for a short period of time. Gold's 200-day moving average is $2,700. So yes, gold does have the potential to dip lower. And what normally happens is big institutions and even sovereign wealth funds and central banks are always watching for those 200-day moving average. And if it hits that or even dip below it, you got big buyers come in, and you'll bring it right back up off that 200-day moving average. So I don't know if we'll see 2,700. I almost kind of doubt it, but it's possible. And that would be a hell of a deal on gold as far as that goes, if it moves to that 200-day moving average, if it gets even close to it. But they won't be triggered unless it hits the 200-day moving average. If it does, it'll bounce off of that pretty quick. I did also some research, and the 200-day moving average on silver is 29.60, and right now we're at 29.66. Close enough. I really doubt, especially after this break on the weekend, and then coming into the Asian market on Sunday night at 6 o'clock, I believe. Yeah, I think it starts at 6 o'clock our time. That I really doubt that it's going to go below the 200-day moving average. In fact, I think you'll see, especially after everybody's had a chance to calm down and sort things out, I think you're going to see it start to come up. Maybe not fast, but it's going to start to come up off that 200-day moving average. Like I said in the past, this fake fiat currency system is coming to an end, and the only real money out there is gold and silver, and all the above, the central or the sovereign wealth funds, big money, smart money, whatever you want to call it, the central banks when it comes to gold, they're all buying, and as much as they can, but they really double down, just like you and I. When it gets down to that 200-day moving average, they double down, and buy quite a bit. That's why it'll bounce off of that really quick. So I don't see too much more downside for silver, although it could go lower. And boy, if it does, I got a little extra to get in on that. If it goes any lower, I got it. I've got a little extra set aside to get into that lower price range. I don't think we're going to see silver go lower, but it is very possible that we'll see that gold get closer, at least closer, maybe not hit it, but get closer to that 200-day moving average. That'll be something to watch for Sunday night when the markets open back up. I've got Kitco app loaded on my phone, so I kind of like to watch that stock. In this case, I like to watch that stock market on Sunday night, the Asian stock market, and see what it does. It'll be interesting. So at any rate, you can see that the fact that you know, it's taken a $4 plunge, I'm not worried about my stack at all. My stack is my stack. My only concern is adding more to my stack as least expensive as I can. And so this $4 pullback roughly in silver is a great opportunity. Basically, not quite a $200 haircut, but let's say $170 haircut on gold ish, 150, something like that. That's a pretty good. That's a pretty good drop in this situation where we are today, especially with central banks and sovereign wealth funds picking up gold. That's a pretty good. That's a pretty good drop. So I don't expect to see it go much more. Like I said, though, it's possible, and if it does, that's all the better. My insurance premiums come down. You know, I know it seems to be asked backwards from investing, and it really isn't investing. I'm just buying insurance against the um, against the fake fiat currency system. Uh, and the one way to break the bullion banks is to buy physical silver. The more we buy, the more silver and gold, as far as that goes. But the more we buy, the more sovereign wealth funds buy, the more smart money buys on all to the central banks. The more they buy, the less fake paper contracts they can write. So it'll eventually all continue to make gold prices go higher as the Dow Jones and the stock market in general goes down. The money has to transfer somewhere, and a good percentage of it will transfer to the physical gold and silver. Again, I've mentioned in the past, if you're watching gold and silver videos a lot of these videos are sponsored by gold and silver miners. And a lot of these guys have got the gold and silver miners, and they've been crying and whining about gold and silver not doing anything. And oh my God, it's really cheap, and you got to get in. Blah 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 blah. You know, yeah, it just took a goddamn good haircut on both. Gold and silver miners really took a sharp blow. I believe, if memory serves me right around 18%. So that was a hell of a haircut that they didn't expect to get. They really didn't. And they've been crying and whining and telling you how cheap it is and blah blah blah. And I've said in a past video, you might have to go back a ways. You know, they're talking about some stock being only 50 cents a share. It's phenomenally cheap compared to its high, blah blah blah. And I said, yeah, you know, 50 cents a share is cheap until you find out it's 25 cents a share after the stock market takes a shit. Well, stock market's taking a shit, and that stock is on its way to 25 cents a share. It ain't there, but it'll get there. Again, it's just a derivative of the paper. That's what nobody understands. When you cash out, you're going to cash out in dollars. And what is a dollar going to be worth when you cash out? You don't know. That's the problem. And not only that, so your dollar is being devalued and the stocks now are being devalued. Boy, are you taking a freaking haircut if you're buying stocks. Any kind, gold and silver. Will there be a time? Sure there will. This ain't it. This ain't it. When you get the Dow to gold ratio down to 1 to 1, where an ounce of gold will buy you a Dow share, then once it gets there, fine. Then it's time to get back into the stock market again, invest in the Dow Jones, whatever. And it's only got upside at that point. You know, you could cash in your gold if that's the way you like to go. You know, if you don't want to go stocks, I don't like stocks really myself, but to each his own. In the long term, yeah, there's a lot of money to be made, and you know, if the Dow Jones is at a 1 to 1 ratio, chances are that gold is plateaued and is either gonna. I doubt it's gonna drop from where it's going, but it probably is going to be really slow growth after that. So we'll see how it all pans out. I'm, like I said before, I'm keeping my gold and silver, whatever I accumulate, as something to borrow against in the future. In most market changes over the years, you know, it goes, you got highs in gold and silver and you got lows in gold and silver. When gold is low and silver is low, the stock market's up. So they're flipping now back to the gold and silver, stock market's coming down. But this truly is a different situation where gold and silver physically being stacked by most everybody. So this is definitely a bull market, and your fiat currencies are going to be replaced by a new system, whatever that looks like at the end of the day. I'm not sure. Much like myself, I think that they're going to use gold and silver, if nothing else, to back the new system as collateral, let's say one-to-one collateral. And most will say that can't be done. There's not enough gold, there's not enough silver. Well, I'll say two things about that. Well, one, yes, gold and silver is going to have to go up a lot in order to meet that demand, but also means that all your stuff that is priced in dollars, that's commercial real estate, regular real estate, housing, commercial housing, everything that your stocks and bonds and everything is going to come down. So they're going to have to come back to what is a reasonable rate. This markets have been pushed way beyond. It's so fake, it's ridiculous, by this money printing that they've done over the last millennia, really, since the first of the 2000s. Since the year 2000, it's really been manipulated heavily. It's been manipulated for the last 100 years practically, but it heavily manipulated the last 24, 25 years now. Really heavily manipulated, and that's going to flip. So we'll see how it winds up at the end of the day. I know gold and silver is going to wind up being a lot higher than they are, and I know priced in dollars, that is. Value is going to be the same, but price in dollars are going to be a lot higher, and the Dow Jones and commercial real estate in general, is going to be a lot lower. So we'll see how it all shakes out. Appreciate you guys stopping by. 20-some minutes, I think that's good. I just kind of wanted to, give you my feelings on this dip, and it shouldn't make you scared and make you cash out or quit buying. It's like I said, for me, it's an insurance policy against the fake fiat system. So appreciate you guys stopping by again today. If you would, like and subscribe, and please leave a comment. I try to answer all the comments. Might take me a couple days to get there, but I will. Thanks a lot, guys. Appreciate it. Bye.